Hi, I'm coming to you on a Saturday morning, and we had a really just kind of like a classic spike situation last week in the VIX with um we just got a big pop. It looked like the end of the world for a couple of days, and then everything just kind of crashed right back down. Let me show you a chart of the VIX to kind of explain what I'm talking about here. So this is a chart of the VIX right next to me. So if we look, you can see on the far right of this chart, and if I kind of widen it out here, you can just see the move here down. You see this up move, boom, and then down again. And that's a different view of it. But I mean, you just see this boom from, from we were down around 13. This is where I did the show saying, oh, maybe it'll go lower from here. Boom, higher, and then bang. But notice it comes right back down. So it's tough as a trader if you're short, whichever product, TVIX, UVXY, or whatever. If you're short and it gets this spike here, it's tough to hang. It's very hard to hang. Let's take a look at UVXY during this action here. You can see UVXY. We were short the 26.30 spread, and all of a sudden we go from being right around the 26 level to above the 30 level, and it's like boom, and it's tough to hang in there. You start looking at news stories. It seems like the end of the world. The economy is done for. Everything's done for, and you've got to have, unfortunately, to be successful at trading the VIX, you've got to have the intestinal fortitude to hang out when you get these pops like this. And there are certainly scenarios out there where this could have just stayed up at 30 for a while, and thus that's why you need to have a plan ahead of time as to how you're going to manage time with your position. So, for example, the position we've had on for a while has been this November 26.30 call vertical, right? We're short the November 26 call, and we're long the 30 call. We've got 41 days till expiration, so that gives us some time, right? That's over a month, but it might not be enough time. So what if we start to think, we're running out of time? Well, what we can do is we can roll this position. So if I go down to the bottom here and I highlight 26 call, and then I'm holding down control and I'm left clicking on the mouse, and I highlight the two strikes I'm interested in. Then if I right click on the mouse, it's going to give me alternatives. And here we go, create rolling order. Boom. So create rolling order. So this is going to give me, it's going to just set up to roll to the next week. But we probably don't want to roll it 1 week because it's going to cost us a little bit to roll. Remember, each of these contracts, when you do when you do a roll, however many times you have the spread on, you're going to spend whatever your commission is. It's going to be times 4 because there's 4 little legs in this roll. So you probably don't want to roll it out a week. You probably want to roll it out further than that because it's expensive to adjust your position. So, but let's look to roll it out to December. Okay, so if we roll out to December, if we look on here, December is 76 days from now. You could even consider January. But let's look for December. Now, it's showing, because of all the weird marks, it's showing a credit. It's going to cost you, depending on where you are in a spread, it's going to usually cost you money to roll it out. In this case, it's showing a credit, which is a little strange. I think the midpoints are a little bit messed up. But either way, you might investigate rolling some or more of your spread out. Now, the longer I've traded the VIX, the more conservative I've gotten as far as my strike selection and how far I roll stuff out. So, yeah, you'd like to make the money by November, but you'd rather make it by December than not at all. So the farther you kind of move stuff out, the more successful you're going to be over time. And I think if you were to ask a number of different people who've been trading the VIX for a while, they'd tell you that exact same thing, which is, once again, the more conservative the trades you make and the longer time you give yourself, the more successful you're going to be. Now, it's tempting to do stuff closer to the front week because you get more bang for the buck with that kind of trade. I'm popping my collar here. But you're going to be more successful if you roll stuff out farther. So, and in this case here, I did not trade very well this week. I kind of panicked a little bit, and I started moving stuff around. And I'll show you what I did. Let's see if I can pull up my trade activity for the last few days. So let's see. All right, so this is trade activity for the last few days. And what I ended up doing, actually, is I ended up moving my spread from that 26.30 spread. I moved it once, you know, I had this spread on, and I also had another spread on, making it a condor. I had sold a put spread. I ended up moving this to an October with just 13 days to go. I moved it to just being short the 30, short the OC30 call, and long the OC34 call. So it was a spread where when we were up at 30, it was a spread that we just needed to be below 30 in 2 weeks. And I sold this spread for $1. I rolled into it, so it's hard to say exactly what I sold it for, but somewhere around a $1.20, 15 times. And then when we started moving lower yesterday, I rolled back into this November 26.30 spread. And once again, I'll pull up my trade activity so you can see it here really quickly. So that was, let me move out of the way for a sec so you can blow this up if you really want to look at it. But basically, it's right. This is me switching. This trade right here is me switching from the October 30.34 spread to back to the November 26.30 spread. But the thing is, my problem is that every time we're switching stuff around, it costs us money. So you want to try to set and forget. It's hard to do though at times because whereas with the VIX, stuff is likely to come back because we know the VIX itself is just oscillating up and down, right? It's not like a stock where it can just take off to the upside and it's gone. The VIX is just going to go up and down, up and down, up and down. However, it can go for extended periods of time in one direction, and you have to hang out. Fortunately, this time around it came right back, which is great, and we'll see what happens from here. Noticeably, during this most recent spike, we didn't see much action from the VVIX. The VVIX stayed pretty low the whole time. Let's look at VVIX for a second. And we didn't see the VVIX really popping into the spike that much, and it's just going lower from there. Look, it's at a lower point than it's been in a while, but it got up to 106, but that compared with the spike, can we overlay the VVIX on the VIX? Well, let's try that. So if we go to Studies, Add Study, and then I'm going to go compare with the VIX. Now remember, the VVIX is a measure of the volatility of options on VIX futures. So if a lot of people are buying options on VIX futures, it's going to go higher. So here we have, so the VIX pops, right? Boom. And VVIX didn't even make a high, you know? See, the VVIX not really playing along here with this pop here. Just kind of blah. And then as soon as we reached the top of the spike, people came in and were selling VIX options. They're getting out of stuff. So not a lot of action from the VVIX here at all. Let's take a look while we're overlaying stuff. I wanted to take a look at VXX versus UVXY. Now, this is going to show you two things. It's going to show you the effect of 1.5 times leverage, which we get with UVXY, but not the VVIX. And it's also going to show you the decay from 1.5 times leverage for UVXY. So now we've got VXX over VIX, but what we're going to do is we're going to remove all studies. Then we're going to compare VXX to UVXY. So I'm going to go once again, add study, compare with custom symbol, and we're going to go UVXY. Now, if we back this out, this is, let's see, what is this? 4 hours. This is 180 days. And you can see over the course of 180 days, UVXY is the purple one there, and you kind of have to back it out, otherwise you don't get to see the actual, it doesn't line up right, and you don't actually get to see the decay very well. But let me widen this out a little bit. You can see on the spikes, UVXY goes, hold on one second. Let me switch, maybe I can switch this to percentage. Anyway, you can see on the spikes, UVXY goes a little bit higher sometimes. That's due to the leverage effect. But you can see over time, UVXY is slowly diverging to the downside from VXX. That's due to beta drift and the effect, which is the effects of rebalancing over time a leveraged product. And you can see it going lower like that. And I want to see if I can switch this to percentages. Display, show price as a percentage. Yeah, so you can see it diverging from VXX as the effects of that rebalancing start to make it decay lower. That's why UVXY is desirable to VXX in many occasions, because we do have that opportunity to use the effects of beta drift decay to the downside to help us to the downside there. Get me out of the way a little bit. And you can see there as it is diverging from the price of VXX. So yeah, it's been tough to hang this week. It's been a tough week for being short, obviously, because we've gotten the up move, and it's tough to hang. You know, if you're short calls or something and they're coming close to expiration, all of a sudden UVXY is higher than it was. So that's a bummer. So we need to either roll them out, or you're going to end up just taking a loss, or take a loss and reestablish at a different level. So let's erase all remove all studies, and go back to our regular UVXY chart. I've gotten a lot of questions lately about splitting. People are always very interested in 4-for-1 or 5-for-1 splits. And I did tweet out a chart of when UVXY has split in the past. Let's pull that up really quickly, because, you know, in your mind's eye, at least in my mind's eye, which is probably different than other people's mind's eye, it seems like the thing split a lot. But the reality is it hasn't split all that much. So here's a chart of the splits, and I've only been trading UVXY for the last 3 splits, maybe 2 splits. I think I started trading UVXY in maybe like March of 2017. So maybe I've only been there for 2 splits. So people were remembering, look, it's like 1 a year. Well, 2 in 2012, and then it's like 1 a year pretty much. But it kind of seems like more than that, because it's just decaying all the time. And there's like a month, but while you're anticipating the split and whatnot. But people are curious if they started trading what's going to happen when it splits. And it is a very organized process. Now, you could tell just by looking at the options that this split. How can we do that? Well, look at the leap options, the Jan options moving out. Notice how on the screen here there's Jan options that say 20 out of 100, 20 out of 100. That is the remnants of a split. You know, this last split here, 5 for 1, right? 20 over 100, that's 1/5 of 100. So if you pull up a chart and you're not familiar with the underlying and you see something that says 20 for 100, that means there was a 5 for 1 split. And these options were listed before the split. So what happens is that they relist new options with the normal 100 shares per option, and then these options after the split, they only represent 20 shares per option. So if you exercise a call, you only get 20 shares of stock as opposed to 100. Most stocks are normally 100. And so that is what that is. And when we have a split, it's not like a big deal. It's not, people get confused about this all the time. And with equities as well. People are like, oh, a stock's splitting, we got to buy it right before the split. And of course, if everybody in the world believes that like a stock splitting is a buying opportunity, then it's going to go up. And I'm sure in the history of the stock market before, when stuff is split, it gets a lot of publicity and maybe it does go up. But the mechanics of it are not that it goes up. It's nothing is lost, nothing's gained when the split happens, and it just it's a fairly orderly fashion. Now, UVXY, I don't know if we kind of say it's splitting. What we mean is actually it's reverse splitting. So usually a stock, something like US Robotics, goes up, splits, goes up more, splits. Usually where they do it with stocks because they want to make it so more manageable for people. Now, something like Priceline, they probably should have split Priceline stock. Or like, Berkshire Hathaway, it's like $300,000 a share. Priceline, $1,900. They probably should have split that at some point to, because it makes it more attractive for a normal investor. If this was trading $19, it might make it more attractive for a normal investor to buy. Because, if you've got $2,000, you can only buy one share. It's like Amazon. It's like, oh, I'm going to save up my pay for a while and I can get one share of Amazon. Same with Priceline. Let me look at US Robotics. I just remember my buddy was trading US Robotics and it seemed to be splitting all the time. US Robotics stock. The company name is a reference to the fictional USRX. All right. USRX stock splits. Anyways, I don't want to waste too much time on this, but the thing splits a lot. So stocksplithistory.com. So that's got to be a different one because it says no splits. Anyway, usually with stock splits, a stock goes up, it gets to a high price, they split it. With UVXY, it's the opposite. UVXY is always going down, and so it's actually a reverse split. We say UVXY is going to split. What we actually mean is it's going to reverse split. And what that means is that the shares become higher priced, and it just makes it more reasonable to trade. It's the same with some other leverage ETFs where the price gets so low that it's just useless, and it can be deceptive when something gets really low because you think, oh, it's so cheap just because the price is low. Well, it's like that's not necessarily true. It depends what's behind the price. Like in the case of our buddy ACB. ACB, each dollar represents $1 billion in value. So that's a lot of money per dollar. So even if you only have a $10 stock, that's $10 billion in value for a relatively small company. So let's look at some leveraged ETFs here. I'm trying to get some ideas of some that have split. I just trade UGAS and DGAS. Let's look at UGAS and DGAS for a second. So what this is this is a natural gas leverage, 3 times leverage. And if you look over time, okay, this is the natural gas 3 times leverage. And if you look at its inverse one, both of them have gone down over time. The inverse one went from 950 to 130. The regular one went from 500 to 14. So they're both slowly going down over time as they rebalance, and they both split over time to keep the prices kind of in a reasonable area. And if we look at UGAS, see if I can do this quickly here. UGAS split history. All right, so here's the UGAS split history. It split 2015, it split 1 for 5. 2016, 1 for 25. 2017, 1 for 10. And any leveraged ETF is going to end up splitting after a while just because they do decay down over time. All right. If you guys don't follow on Twitter, you should, because we have a lot of fun talking with a whole bunch of people on Twitter about all kinds of stuff and debating stuff, and it's a fun time on Twitter all around. So if you don't play on there, you should. There's certain traders that only hang out on Twitter, and I would definitely check it out. One of the easiest ways to follow people on Twitter is find a trader that you respect, check out who they're following, and you can add some of the people who they're following. All right, so the term structure. The term structure got all backwards and twisted, as you would imagine, with the spike, but it's come back quite a bit. And it's looking pretty normal. Remember a couple weeks ago we had the distance between spot and the front month future was like 270 at one point. Well, now it's a respectable only 61 cents. So that's on the tighter side, but this is a pretty normal, that looks like a normal chart, doesn't it? This is a normal VIX term structure where you see the slope going up like that. Notice that the slope doesn't go up between November and December. This is much talked about how December, they keep things a little bit lower than the other months, respectively, just because there's holidays there and it tends to dampen volatility a little bit. But you see that dimple that's been in December for so long, it's not very big right now as we get closer to that month. But we're almost back up to 6% contango. Now, we did go into backwardation briefly, but pretty much when we only have spot go above the futures for a day or two or less, everything tends to stay in this contango shape. Just spot moves higher. And as I was saying before, also in Twitter, now that we're in sort of a mid-range for the VIX as of late, you're going to see spot stays closer to these futures. When we were down towards like the recent extremes of like 13%, even though spot gets to 13%, they kind of hold the futures up higher, anticipating it to come back to that 15 to 18 range. But now with the VIX spot actually at that 17 range, you see these futures are going to hug closer to spot, because we're just kind of in a more average area, and it's conceivable to everybody around that stuff could stay around this area, and thus there's not the reluctance of these futures to stay near spot. When we get to the recent extremes, get back down to 12, 11, 10%, the futures are going to stay up higher in anticipation of us moving back towards the average. But here, the VIX could comfortably stay in this range from 15 to 18 for a while. Notice we are in contango, so your VXXs and your UVXYs will continue to decay and move lower here. However, you're not going to see the extreme amounts of contango or just opportunity from the distance between these futures and spot being that big. Recently, we had the distance between spot and the front month future being like 250, and the second month future being up to 3 and change. Now it's a tighter situation, and that in a sense means less decay for our VIX ETPs, but it also means there's less of a coiling up. When VIX gets way low, it's almost like a spring coiling up. VIX gets down to like 10, it's like a spring coiling up, and you get a situation where like it can pop violently higher. Once we're up around 17, 18 here, it's not going to pop that violently higher unless something really big happens, because as soon as it gets above 20, most people don't want to be buying into a VIX above 20. At least they're gonna think twice before they start aggressively bidding up VIX stuff with VIX above 20. Because although historically 20 is not a really high number, it's more the average. In recent times, 20 has been a higher number, and it tends to not stay above 20 very long lately. Good once again tweet by Matt Thompson this week talking about how 20 is definitely not the ceiling historically for the VIX, but recently it has been a spot where people are not aggressively buying it above 20. So you've got a VIX up here. This would be a healthy spot if the VIX just hung out around between 15 and 17 and we stay in contango. That's a nice, healthy area to be short the VIX in, because you have somewhat of resistance once you move a lot higher, and there's room for this to fall a lot lower. I mean, this could easily fall to 15, and people are not going to be like defending the 15 handle in the VIX. And I talk about that facetiously because nobody defends handles in the VIX. But when VIX gets to like 9, there's definitely buyers out there. But this can easily go lower from here, and there is some sort of a little bit of resistance once we get above 20. So healthy spot to be in to be short this stuff, and it's definitely healthier than when we're at the lows. When will we bust through the all-time lows again? Well, that's a good question. We definitely don't have that decay that we had before this was nerfed from 2% to 1.5%. Things are moving slower now. When we look at that split history, remember UVXY was a 2 times leveraged product all the way up until February of 2018. So this is going to decay more slowly. When it's 1.5 times, that's a big nerfing from 2 times to 1.5 times. It doesn't sound like much, but it's going to reduce the amount that this decays by a lot that's happened. And we still haven't completely adjusted to it seems, in our expectations. You hear people in the chat saying, UVXY going to 12 next week. Somebody was saying this week, UVXY definitely going to split this year. It is going to take some serious, even if the VIX went right now to like 10 and just stayed there for the next couple months, this probably wouldn't make it to split this year. So have realistic expectations. This could go through 20 this year, but I don't see this going through 10 this year. It would take a lot of contango and a lot of basically we would have to have a big rally and volatility to really come in to get UVXY to 15 this year. So be realistic in your expectations. And like I said, it takes some intestinal fortitude to hang with a short position when you get the spike like you did last week. It's not fun to lose money and then all of a sudden have to kind of readjust your expectations. You're used to a UVXY 23 to 25, and all of a sudden it's 30 again, and it's like, whoa, it's going to have to go back down $5 to get to where I'm back in the money. I'm talking hypothetically, depending on what your position is. I know some people sold like the 23 calls, and it can be a daunting thing when you see this thing pop up to 30, but look how much it's changed in just a day or two. All of a sudden, we're back to the 26 handle, like very quickly. Thursday or Wednesday, it seemed like, wow, we're back up to the 30s range. But look, boom. Tuesday, boom. Wednesday, we're hanging out. It seems like, oh, a new range, $30. But then right back down to 26 here. And this movement of up day, that, and then down day, that is going to cause this to decay more than usual because you've got an up move and then a down move. And each time it has to readjust the leverage. And thus, that's going to create things to decay more than usual, which is going to offset the fact that here we weren't in that much contango. But we're right back in contango again. We'll have to see what happens moving forward. It was a big rally on Friday. The other thing I did was I did purchase some TQQQ in another account. Let me show that to you. On the down move, when the market was looking pretty bad and TQQQ was down, I did purchase some. I think I paid $57. I think I paid $57. Password not correct. I guess I have to get it on my other computer. Anyways, I did buy some QQQ. I bought 100 shares of QQQ. Paid 56 and change. And here on Thursday, I bought it somewhere like around here. And I still own it. I'm kind of hanging out. I'm going to dump that because I usually just buy QQQ, like to buy the dip on down moves. But we got the nice pop there. ACB, once again, our old friend, which I don't have a position in. But look at this reversal day here. It was, I think, once again, Thursday. But look, it gets down to 380. And then all of a sudden, boom. Down, boom. And then this move up here, I'm not sure what happened, if it was a news story or it's just something that affected all the MJs, but it's just like a boom. Let's see if CGC had a similar on Thursday. Very similar chart. Look, down, boom. These tend to trade in tandem. You notice that, right? These MJs. And the same thing here. Down, boom. So when you see stuff that's trading in very similar ways like this, we can play with our overlay. I'm trying to do just a little bit of let's see. That's very strange. Well, it's acting wacky. It's showing part of the screen on my second monitor, so I guess I can't show you that right now. But these are operating very similar, a lot of these MJs, and what that leads me to believe is that a lot of people are just long these MJ ETFs, and so when the ETF needs to buy some of each one, they all go up, and when the ETF needs to sell some of each one, they all go down. The market is now categorized in all these passive trading with these ETFs, and so you buy one, marijuana ETFs. So somebody buys the ETF and everything else goes higher. 7 ETF reports. Now, people have just gotten killed in this industry, and they just keep coming back for more. I don't know why. Look, MJ ETF, this looks like it has the most. Assets under management, that's what AUM stands for, 780 million. MJ, down 36% this year. Or 3 months, down 36%. Painful, folks, painful. Pain and suffering. Everybody is getting hurt. If we look on, I don't know if you knew it, but I have my own MJ Facebook group. And I don't do that much with it, but here it is. It's called, it's not called Options Trader, it's called Cannabis Stock Group. And they banned me for the name at one point, or not banned me, but yeah, they took it down for a second for the name. But this is my own group. And look, Rich TV, YouTuber, I don't know if you guys are familiar with, cool guy, but celebrating that up move. But, you know, the subtext behind celebrating the up move in these MJ stocks is they've just gotten killed. Killed. So anybody who's like long a bunch of this stuff has gotten killed. So I'm sure he's celebrating. But probably if you talk to him privately, he'd say, yeah, it's been a tough run for the MJs because it really has been. And I don't really want to beat a dead horse personally. I made some money in Afria way back when in December of 2017. But ever since then, it's been kind of a struggle. Look at that chart. 2017, okay, right here, I did buy Afria and I did ride it for several dollars, which was awesome, right? But then I did 2 things right. I bought it here and I sold it here. You could buy it here, and if you didn't sell it here, it's just going to go right back to where it was, right? So that was a great move for me. But I had several missteps once we got down like back to here, you know, trying to buy it again and getting chopped up over here. ACB. And Afria, to be honest with you, I was trading Afria back down here, right? I bought it for like 4 or 5. I bought it for like 4 or 5, then I sold it out, and then I bought it again, and it went way up, and I made a bunch of money. So that was great. But since then, ACB, boom. I've gotten chopped up trying to like buy it like here it goes down, try to buy it here it goes down, blah blah blah, chopped up. INSY, another one. This is sort of MJ related. They got sued by the government for misbranding opioids. Boom, 29 cents. So that's no good. And I got hurt in this one. I was trading options in this one for a little while and got hurt. Can it be growth? You know, this was the big one where it made this huge up move here and the other move here. Boom. Which this started the party again in MJ's. It was like 1 or 2 days. This one ripped up, and all of a sudden everybody was, wow, MJ's, let's get back in the MJ's. And everybody starts buying stuff and started getting chopped up again. We all remember Tilray. Last year, Tilray made this move to 300. This is our buddy Dross, right? He bought 10,000 shares here and sold it up higher and made $1 million, or a couple $1 million actually. You can look at that old video where I interviewed Dross about that. But yeah, MJ's just chopped up. No fun. The other thing let's look at. We've got some earnings coming up. Netflix. I did buy a little bit of Netflix in one of my retirement things recently. We'll have to see what happens with that. Anyways, I'm going a little bit long now, so I'm probably going to break it off here. But I did want to come on. I will be Monday, Wednesday, and Fridays in the Twitter room, 9 a.m. Don't know how long I'll stay for, but I will be there Monday, Wednesday, and Fridays. So check it out there. Besides that, what else have we got going on? Side jobs are really busy for me, so that's, I guess, a good thing. Make money, right? Make more money to build the different retirement stuff. It's like Warren Buffett says, you need an engine to make money to invest with. And if you've got jobs that can add money to your stash, then that only helps out in the long run. And let's look at Drudge Report really quick as a weekend update. Subpoenas fly. There's a new subpoena came out. Anyway, the fight in Washington continues. And there you go. All right, so thanks for watching today, folks. I'll keep you updated, and check me out earlier in the week. I want to actually, let me highlight a couple of YouTube channels that I really like lately. True Crime Loser. I don't know if you checked this one out, but for some reason, people love this Jim Can't Swim channel. But I think this guy's better. True Crime Loser. He is a stand-up comedian, but he covers all these true crime stories, and he is hilarious. He has these running jokes that like continue throughout the videos. I would recommend to start with, check out maybe his like Stephanie Lazarus videos, or his his Stephen McDaniel. I don't know if you're familiar with the Stephen McDaniel case, but basically Stephen McDaniel murdered I mean, obviously these are serious cases, but you know, there is some stuff to be made light of in these interrogations. But he describes interrogations and what happened during them. I would definitely check out the Stephen McDaniel one, the Stephanie Lazarus, and the Dalia DiPolito are new classics. This guy's hilarious. You guys got to check out some of this. It's called True Crime Loser on YouTube, and it's totally awesome. Makes me want to be like a true crime guy somehow. Or not a true, you know what I mean. Do some videos like that. Anyway, hope you have a great rest of your weekend, and I will see you on Monday. Let's see if this sell-off in UVXY continues. Very exciting to be back at the 26 handle. Let's get back to the 23 handle, folks. Bye-bye. Thanks for watching.